The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the June 4th wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Tuesday, and it is wonderful Wednesday, so our first course of action this morning is to make sure that we know our daily outcomes. My first outcome this morning, it's to teach you how to master the tools for trading. And that includes the tools of the mind, because when we can master the tools of our mind, we begin to think like a strategist. So that's why, during the next hour, you'll hear me use terms like A to B equals CD, terms like swing points, Gartleyan butterfly patterns, and various candlestick signals that the sign makers of the markets, the bulls and the bears, create for you and I for each time frame that we trade. Now, each of these patterns and signals on a standalone basis are what I call tactical tools. And knowing how to use these tactical tools, it's really important. But you see, the real key to trading, the real key to investing, the real key to get your money to work harder for you than you do for it is to have a strategy. And that's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, folks, it's not an option. It's not an option in our playbook. Now, make sure that we don't come to the conclusion that failure and losing money is the same thing, because it's not. You see, in trading and investing, our spoilage is money, just like the food that's gone bad in your refrigerator. Yet most of us don't really correlate that kind of waste to throwing away money. But the reality is, it is one and the same. And as long as we use stops, as long as we have an exit strategy that covers both sides of the trade, then the loss of money is nothing more than spoilage resulting from a failed trade pattern, which is quite frankly a part of any trading strategy. It's what's called knowing your system expectancy. That, folks, is your ultimate performance tool. So today and every day, let's do what we can to think like a strategist, because strategists will slay the tactician all day long. And let's go look at one of our tools to help us think like a strategist, the tool I call, for changes to be of any true value, they've got to be lasting and consistent. Think about it. Think about your life. For changes to be of any true value, they've got to be lasting and consistent. Because, you see, anytime we sincerely want to make a change in our life, the first thing we must do is what? The first thing we must do is raise our standards. That's right. You see, the most important part of change is what we demand of ourselves. So if you're looking to make some change in your life for changes, give this a shot. Demand more from yourself. And begin the process by writing down on paper all the things you will no longer accept in your life, all the things you will no longer tolerate, and most importantly, all the things that you aspire to become. You see, it's just like trading and investing. You need to know both sides of the trade. It's as simple as that, folks. Commit to constant and never-ending improvement. For if you do, you will get the changes you are committed to. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here. Right now, we've got Dow futures off 25 points. Our trade out at 16,687. I can swear most mornings here lately, I've been telling you that the Dow futures are trading right around 16,687. Must mean not a lot of movement out there. S&P futures off 4 points. They're trading 19.18. NASDAQ futures down 10. Trading out at 37.20. King dollar back a couple of pennies right now. Trading out at $80.56. Relatively calm in the currency market. Both paper and hard currency. Goldilocks up $3 right now. 12.47. Man, she is oversold big time. We ought to see some bounces here. Don't let that get you too crazed out there that we're about to see a turn out here. I don't think so. The gold and silver are nothing but right now oversold out there. Silver's up 8 pennies. It is trading out at $18.84. Light sweet crude up 69 cents right now. That's trading out at 103 and 34 pennies. Let's get see if we can get any clues about what the market is doing by looking overseas out here. Yesterday we were looking at the DAX. Let's put the DAX up on my screen right now. Let's go take a look at the DAX. Should be right here. And then if we take a look at the DAX, one of the things we were looking for, one of the things we wanted to pay attention to was the potential. The potential for an island top reversal has not happened. Has not happened, at least as of yet. DAX is off 23 points right now. Not a big deal. What the DAX is doing, though, it's testing the breakout session, that gap up from the trading session of May 27th. The low out there, 98.79.64. It's tested that thus far. It's trading out at 98.96.19. So it's trading above that level. So it's tested it. It's rejected it. I don't have the volume. Look, we can just pay attention to what happens with regard to price. As long as it stays above 98.79.64. Now, today would be the first test of that actual swing point low out there. But a test and a rejection, it's more bullish than it is bearish, that's for sure, and it says that that's a level 1 of support. Of course, level 2 of support inside of the DAX is the high of the prior session, the high where the breakout came from. That was May 23rd, and that level was at 97.79.59. It's only if the DAX either closes below that level or if the DAX has some kind of island top reversal pattern that one could really take a bearish outlook on the DAX out there. Of course, we do know that it did, I think yesterday we were taking a look at it, but put in pretty close to the 1.272 butterfly pattern. I think it was maybe just shy of that, 1.23. That's close enough for me in my line of work out here. So we do have the DAX put in a 1.272 butterfly. We also have a key reversal session. That took place here on June the 2nd. That was on Monday. Tuesday had lower price out there. So that is suggesting, that's enough of a suggestion that we should see a pullback to the 95.80, maybe the 93.25 level. So if we're going to go overseas and look for clues, this pattern here has certainly not been taken out as of yet, and therefore its message is one of at least a retracement inside of the market. And the only thing that will change that is a close above 99.92.33. That is the high from June 2nd from Monday out there. As long as I'm in the world charts out here, let's take a look at, let's go see what's going on over in the Nikkei. Here's a Nikkei out here. So the Nikkei last night finished up 33 points. Not too bad, considering it had traded much lower during the session. Now, what the Nikkei has done out here, it has broken through. Actually, if you take a look at this thing, has been in a fairly decent consolidation mode. But let's just take a look at what it's done here recently. It had a nice little descending price channel, right? That's coming off of the high that was placed on December 30th out here. That's the red diagonal lines on my screen to the downside. We saw the Nikkei bunt a move out of this level here on May 23rd. So that's bullish. Of course, it's running into a bit of resistance out here. Here's your little consolidation right now, and it really kind of is the essence of what's going on inside the marketplace right now. A lot of consolidating patterns. So it looks like the Nikkei ought to test the top of the consolidation area, probably about the price level of 15,266 out there. We'll see if it can break above that. Now, speaking of consolidations, I suppose, because you want to know, hey, what's going on in our market? You're just like, I'm not over trading the Nikkei, Steve-O. So what's going on inside our marketplace out here? Well, let's go take a look at it. Let's go take a look at the 120-minute chart here for the ES Mini. Let's pull that up on our screen here. And if we take a look at the 120-minute chart here for the ES Mini, what are we seeing here? We're seeing nothing more than what? Then a little consolidation box out here. The ES Mini has been consolidating in between a range of, let's say, about the 1914 level up to right around 1923. So, yeah, 1423. You got 9 points out there. That would say that the break of either side of this ought to bring about a 9-point move. Either 9 points lower, meaning getting you down to about the 1904 level. Yeah, I think 1904 or so. Or getting above would take it to about the 1932-ish range out here. So you got a nice little high-level consolidation that's going on. If we take a look at that's the 120-minute time frame chart. Now, we've seen here this morning, we've seen a move down. We've seen a move down to a low of 1916. And you may be saying, hey, Steve-O, this is what I would be saying. Why did the ES Mini stop at that level? Well, there's a couple of reasons. I'm glad you asked me that question. Number one, if you go from the swing point low out here, well, really we're going to go take a look at two candles. So we're going to go from the 12 noon low, that's of Monday, out at 1913.75 up to the swing point high out there. Let me just pull this across this way. you're going to see that price stopped at about the .786 retracement. 1916 was the number. That's your .786 retracement. Hey, 1916 is exactly what it got to. We can also take a look at the TAS market profile system. We'll go do that. We'll take a look at the ES Mini. Of course, that was the 120-minute chart that we were looking at there. Let's take a look at the 240-minute time frame out here. 240-minute time frame shows us what? It also shows us a version of a consolidation box. The unfair high at 1924. The unfair low at 1916. It says 1915.80, but you can't get the ES Mini to trade down to that exact price point. It's a mathematical calculation of support and resistance. If, in fact, on the 240-minute chart, you see price close below 1916, that's at least short-term bullish as well. A close above 1924, that's short-term. I said short-term bullish, didn't I? Close below the low would be short-term bearish. Above the high would be long and strong. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, TAS Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos TAS Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to TAS Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went to break, we were looking at the 240-minute chart, the 4-hour chart for the S&P futures, and we took a look at the 120-minute chart. We saw consolidation. We flipped over, took a look at the 240-minute chart just to see where the support and resistance lines are there. So really, what you've got right now is kind of a neutral signal. The consolidation box tells us that the next move should be about 9 points. The TAS signal box is not going to go ahead and give you any kind of price projections. Just really tells you when you should consider being long, when you should consider being short. And remember, you can always play a consolidation zone out there. So if you're an intraday trader, 1924 is your sell, 1916 is your buy or your cover, and vice versa. Likewise, your stop is in essence somewhere on the other side. You got to give it more than a couple of ticks out there. If in fact we see a break of 1916, someone out there must have asked the question, well, where would price go to? Remember, I gave you that 9 point level. So 1960 minus 9, what we were talking about, that's around 1915 or so, 1916 minus 9, that would be around the 1905-ish type range. Well, here's the interesting thing. If we take a look at the 1906-ish, if we take a look at the daily chart here for the ES Mini, and that is that this morning we're seeing a new box that has formed. I don't know if this will stay all day because I thought there was one maybe that had formed yesterday. But in any event, let's just take a look at today's action. Let me get my crosshair out there. It makes it a little bit easier, at least for me to follow along, maybe for you to follow along as well. So let's make sure that these things are visible and you can see where my cursor labels are. Okay, so if we're taking a look at today's action, this shows that the 1910 level, we'll use 1910.25, shows 1910.35. 1910 and a quarter should be support today. If we were to see a close below that level, that would be bearish. You'd be bearish on the 240-minute chart. You'd be bearish on the daily chart as well out there. And then that sets up, a retracement for sure. And that retracement here, let me try using the retracement. Where's my retracement tool? Oh, that's interesting. It's not on this version of the chart. How about that? I'll switch over to another chart. Let me do that here real quickly. Let me switch over to the daily chart here for the ES. And if we take a look at that, the retracement probably is somewhere, I'm going to guess that, I'm not going to guess about anything. Retracement 1878, which is your 0.382 retracement level. I would have to say, more likely, you'd really be focused on this, the old areas of resistance, which was set up by the April 4th key reversal session. The top of that is 1892. You had a version of a reversal out here. Oh, that doesn't really qualify as a morning star. That's the May 12th, 13th, and the 14th candle out here. So I would say the likely pullback would be to the 1892-ish type range. And if it breaks that area, 1878, and then, of course, what is more likely the outcome is really a move down into the rising price channel out here. That's a pretty nice rising price channel. If you take this back, take a look at this, folks. If you take this back all the way into November of 2012, if you take it back out to November of 2012 out here, you can see that price has not broken through, well, except for 2 days. 2 days back in the early February timeframe of this year as the market was moving down. But in essence, that area really held. So that would be the spot that I would be looking for if, in fact, we were to see some kind of reversal inside of the market. And it's up towards the overbought area. Likewise, look. let's face it. All signs at this stage point to bullish. And bullish inside the ES Mini says it wants to actually move to 1957. 1957 is the equivalent of an A to B equals C to the upside. It's also the equivalent of a measured move. And the measured move being the consolidation box that it had broken out of. So, over time, that's where it wants to go to. That much is the message at the moment, that being June 4th. 2014. Let's go check in on our favorite currency pair. We can't do that before the 9:30 bell open out here, and that's our Euro-Japanese yen. What's it done here? Well, it's achieved, in essence, or very close to achieving its first objective. The first objective out of 5 of any Gartley buy or sell, in this case here was a Gartley buy pattern, is your 0.382 retracement. Now, that magic number is 140.19. It's been up as high as 139.90. Right now. That is PDC. That's pretty darn close, folks. That's the first move. Typically, what happens in the market on a Gartley is it makes that 0.382 retracement, and then it does a little bit of a pullback out there. I suspect that's really what's going on inside of the Euro-Japanese yen. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 23 points. Trade out at 16,698. S&P down 4. Trade at 1920. Composite off 11 points. Trading out at 4222. Russell 2000 off 4. Trading at 1121. Lead the charge to the upside. Protective Life Corp. PL is the ticker symbol, up 18% this morning, up $10 and change. Prudential Financial. PRU is a ticker symbol. That's up about 3%, up $2 and change. NQ Mobile up 28% this morning, up $2 and change. First Solar, FSLR, up 3%, up about $2. SunPower up about $2. That's about 6%. Vanda Pharmaceuticals, VNDA, up nearly 13% here this morning. MetLife up $1. Apple up $1. IBM up 72 cents. If we take a look at what's to the downside out here, Tibco Software kind of leading the charge, jockeying back and forth between Tibco Software and Solar City, SCTY, both off about $2.50 right now. Jinko Solar, JKS is a ticker symbol, off 222, room 222 out there. Trinity Industries, TRN, off $1.82. Actavis down 230. Kihu 360 Technology off a couple of bucks. Canadian Solar, the solar company's getting hit here this morning. CSIQ down 7% out there. All right, so let's take a look at some of these equities, see what they are doing out here. Let's go take a look at a combination of tools. Let's go see what we've got going to the upside. NQ Mobile jumping out here, up 27%. Let me see, what is the news on this? NQ Mobile reports on the Special Committee's independent investigation. Well, that's the only news that I've got out here. Let's go see what the stock is doing. Trading up 27% right now. Now, of course, that's easy to do on these kinds of numbers. What it is doing, trading out 976 on its daily time frame here. It's up above the resistance area of the market profile. That's priced at 904. It's traded at 968 as we speak. But we can also see it's been selling off. We can see here that it has been selling off since the gap up out there. Let's look at a different time frame, a couple different time frames. Let's see what the weekly chart, what the signal is giving to us out here. And this is on NQ Mobile. So support. If you take a look at that, market profile this week, providing you with a new market profile. The support level being 709, traded 973 right now. And the weekly chart says it should have resistance at about $13 out there. That's the what the weekly time frame. We can see on a weekly chart as well. This thing here, it formed a doji last week, May 26th out there. It's telling you it's really losing its way. It's not active. It's not used as a support level. However, what I will tell you on a weekly chart out here, and I see a question at Dan, is it real? Well, the move here is real. I don't know if they're real or what have you. But what I can tell you, if we just pay attention to the chart out here of what's going on as we speak right now, look, we have 2.5, really almost 3 trading sessions left in the week. But if it closes right around the 1030-ish type range out here, and quite frankly, if it closes up at 1208, that is a huge reversal pattern. This is the reversal pattern right here, this 4-candle session. This is the same exact reversal pattern that we saw back in the 2009. Now, this is a weekly chart we're looking at. This is what we saw in 2009 at the March lows and many other times at significant lows inside of the marketplace out here. So I can only tell you that what the traders are communicating is the potential that the move may be real out here. I can't tell you about the fundamentals of this entity, and that is NQ Mobile. But those are the levels to be paying attention to out there. Protective Life Corp, I thought we might have looked at that yesterday. Let's take a look. Let me put this back to the daily time frame out here. PL is the ticker symbol. And, I think we did we took a look at a couple days ago. This thing had gapped up, and it has gapped up one more time. What is going on here after Daiichi Life buys it? Okay, so there's a buyout. So there you go. $69 out there. Let's go put this on the longer-term chart. Let's go see what this was, where this buyout was taking place inside of this. Let me try to pull this back here a bit. Wow. From a monthly chart, all-time highs as well. So not too shabby. There was an A to B equals CD to the upside in this thing out here. That A to B equals CD. And this is the monthly chart you're looking at. The A point back in March of 2009. The lows out there. No big surprise there. The B point back in February 2011. C point back in October of 2011 out there at 1371. So today it's trading at the 1 to 2 A to B equals CD to the upside. That was on Protective Life. Let's take a look at Prudential. Prudential up a couple of bucks here this morning. Let's take a look at the weekly chart here. Still has room to run before it gets to its all-time highs, looks like back in June of 2007. Let's go see what it's doing on a daily time frame. Up $1.86 right now, up 2%, and most certainly breaking above its resistance level here. Now it's set at 84.60. Broke above it nicely yesterday. Looks like at this stage here on the daily chart, a little bit of a shooting star-ish type candle, but really you have to fill in the gap between yesterday's high and this morning's low, and to me, that's certainly not a shooting star. In any event, Prudential on the weekly time frame. Let's go see if it's running into some resistance up here on the weekly chart for Prudential. Let's go. Yeah, and in fact, it did. How about that? So 89.77 is the TAS signal box. Again, mathematical calculations taking into account volume and the actual unfair higher resistance level at 89.77. And this morning's move up, the higher. Well, I didn't mean to grab that. I meant to grab this. I think I got to get me a new mouse. Come on, what is that? Oh, geez, Louise. What's the high? Oh, I was looking at something else. 89.30. 89.30. I was confusing two of my charting platforms out there. Let's take a look at Vanda Pharmaceuticals. VNDA is the ticker symbol, up a nice 13% this morning, up $1.28. Here is the daily chart on this, and the daily chart right now running into a bit of resistance at its unfair low. So this thing gets into a potentially neutral to bullish mode at about 11.92. So far, the intra-session high out here has been 11.70. So a nice little move right now off of the bottom, but that's all that it is, running into some resistance out here. And, of course, this thing has got a huge little area of support. The better buy on this would be if it would come down and test this bar here, this weekly chart, and that is a nice big breakout session. That's from the week of November 11th, 2013. And that low down there is at $6.11. Let's take a look at Google. Google's the leader in the clubhouse now to the downside. Let's take because of the split and everything. The signal boxes. I don't think it's gonna. Well, maybe the daily might give us some information. I don't. Well, let me pull this back just a bit out here. It does give us some information. It says that what Google ought to do is find some support at about 522 out there. 522.61 to be exact. Let's look at Tesla, TSLA. I thought that was kind of cute. I don't know if you saw the clip. I might have been an annual meeting yesterday. I don't recall what was going on in Tesla. I don't know what meeting it was. That was. I just saw I think he was a 11, 12, 13, 14-year-old boy. I think maybe he might have been 14, and he got up. Somebody gave him the microphone, and he said, hey, I own Tesla. It's the first stock that he bought, and which was kind of cool. And he said, he was speaking with Elon Musk, and he said to Elon, I have really one favor, one question. I don't remember how he actually framed it, but he said, I'd like to get a tour of the factory. That was pretty cool. And, of course, the response was, yeah. Now, if it had been my son, I would have said there's really two questions that I have for you. I'd like a tour of the factory, but first I want you to take me up into space with your SpaceX out there. So in any event, right now the Dow's off 38 points. S&P is down 5. Let's go take a look at Tesla. Let's go see what it is doing. That's on the right-hand side of my screen out here. It is trading below its unfair low. This is the area here where it says being short Tesla is okay. The unfair low inside Tesla, 203.94. So it's trading out at 200.70. So that's what its message is. Now the question would be, hey, where would this simply move to? Well, if we take a look at some potential retracements out here. Now let's go try and use the tool here, my little retracement tool. See if we can get this going here. We click on this, hit this button there. There we go. And what we can see is the 0.382 retracement level is 200.44. If you're looking at my screen out here right now, the retracement levels are listed over on the right-hand side, and it identifies first the Fibonacci number. You'll see 0.382, 0.618, 0.786, and off to the right, you'll actually see the number here. I'll blow this up on my screen so you can see the entire chart, and I'll actually blow it up a bit more. Makes it a little bit easier. So what we're doing here, folks, we're going and taking a look at Tesla. So let's just say that you were using a daily chart of Tesla and you were using a market profile as your system to go ahead and take a look at, trades, long or short. In this case here, it's broken through its unfair low. That's, say, it's breaking through its support level. And so now what we want to do, remember, our target for any trade that you enter into, the very first place that you're going to look is where you see a swing point. And in this case here, and that becomes really your target. It becomes your ultimate target. Why? Because that's considered a 100% move of a move out there. And typically, price will get back to a swing point where it had made a major turn, and then it's going to simply, the theory is that that's an area where there's some support or resistance, where the troops have flanked out a position out there. Then what you also do is you go from that flanked out position, that swing point. In this case here, it happens to be down at the swing point low from May 9th. That's the price level of, 177.22 out there. So if we go from that low to the high that was put in, the high swing point, that was out at 214.80. And then you start taking a look at retracement levels. So but 0.382 retracement level is 200.44. That price, in essence, has already been hit, I believe, this morning. Let's see. The low's been 200.40. Yeah, I would say it's been hit right Johnny on the spot. A close below that is kind of like little elevators out here. When you get onto an elevator, you punch a floor and you're going to go up to it. Usually you don't stop in the middle of a floor. Well, and you get off at floor levels out here. Well, the floors inside a stock chart are represented by Fibonacci numbers. Those Fibonacci numbers being 382, 618, and 786. Some folks use 0.50. If it works for you, I say use it. I'm just going to stick with the core fib numbers for us to take a look at. That says if you see a break of 200.44, pretty good chance that where price is going to gravitate to is the next floor. In this case here, that floor being 191.58 out there. Volume so far in today's trading, 554,000 shares. This thing made a high out here back on May 29th. It did that with about 3.7 million shares out here. Of course, it has a nice little high volume low out here that it wants to test perhaps again. Looks like it was tested once. We're referring to the May 8th session out there, right around the area of 178 or so. 178 is the low. The high out here, which could act as support, is 194.40 out there. That is on Tesla. Of course, that was looking at the daily time frame. Let's go take a look at the weekly time frame for it. Let's go see what it says. In this case here, let me go ahead and get rid of, carries over the fib numbers. We don't want to take a look at that. This says 174.74 becomes the support area, your ultimate target at this stage. What price is doing, it's at its point of control, its largest area of congestion right now out here, which is at 204.83. And with it being in that area, what your expectation should be, it may take a little bit of a juggernaut to knock it off of its stool out there, because that is the area where traders are saying it's okay to buy and it's okay to sell. So that is a neutral zone, a neutral price. That is inside of Tesla. Let's go take a look at Jinko Solar out here. JKS is the ticker symbol. I think there was a question for me to look at something. Let me look inside the den out here. My apologies. Yes, NUE was the ticker symbol. So let's go do that. I need to switch over out here. Let's put in NUE. Then we can go back to Jinko Solar. But let's take care of our dinners here first. NUE is a ticker symbol that is Nucor Corp. Let's take a look at multiple time frames. Let's start with the larger time frame first. Let's take a look at the weekly chart. Weekly chart suggests that this is probably going to head back to the 48.72 to 47.17, the level 47.17 being support. Let me go get my little crosshair going here, the cursor, and makes it a little bit easier for both of us. So looks like 48.72 becomes that little point of control on the weekly time frame out here. You can see a bit of a consolidation, a congestion pattern, and I expect that that's what the signals inside the weekly chart are suggesting to us. 48.70, 47.17. The daily chart does not look as pretty. Looks more bearish. You can see here that we have what looks like an A to B equals CD to the downside. Let's first draw in that pattern. So on the daily chart, your A point is going to be the swing from May 14th. The B point is going to be the low from May 22nd. Looks like quite a small retracement, a 49% retracement. 1-to-1 A to B equals CD gives you a price projection of 49.59, but I don't think so. Well, let's see if this thing passed it with volume. B point had 1.78 million shares passed with volume. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow is off about 28 points right now. S&P is down 2. NASDAQ's off 2. Russell's down 2. It looks like 2s are cheap in Go Fish today. NASDAQ 100 is only off about 90 cents right now. New York Stock Exchange is a leader on the way down. It's off 22 points right now. So not a big deal, only 0.2% out there. New York Stock Exchange is the one that's given us a signal of a impending market retracement here as we speak. Now, I've got up on my screen, I went ahead and turned off the colorized system of the Rhodes momentum trading strategy out here just so I could more clearly show you what is going on the 120-minute time frame. We talked earlier when we began the show, I think it was during the first or second segment, we were looking at the consolidation box inside of the S&P, the ES Mini out here. It's 9:55. We're going into this 120-minute chart. The 120-minute chart completes its next session here at 10 a.m. Now, what you can see is that the bulls are really defending that 1916-ish type area. Been defending it with a vengeance right now in the process of trying to form a nice big hammer candle out here. You know, I've got 5 minutes left in the trading sessions. I can't tell you whether or not it's going to result in a hammer candle. I can tell you when the Money Masters show opens for sure. But at this stage, that's the candle that's formating. Not even a word. Where the heck did that one come from? That's the candle stick that is forming out there. Of course, we've got the bullish engulfing candle on 120-minute chart. That took place at 10 a.m., and that was yesterday. So you can see this is an important level for whatever the reason is that the bulls are defending. Again, that's in the 1916 area. Likewise, there isn't a lot of strength as it gets up and tests these highs out here in the 1924 range. So the ES Mini S&P doing the best it can to hold things up, as well as the NASDAQ, the NQ. Let's go see what the NQ is doing, see what kind of candlesticks might be forming on its chart out here. Oh, come on, me. There we go. Yeah, I can do this. I got 2 minutes left in the show. Let's go see. And maybe did I have the NQ? No, I didn't have the NQ. I had the NQ really doing the same thing as well. So you can see it also trying to form a bit of a hammer candle as we speak. That's after having a nice bull sesh. That's at 10 o'clock yesterday morning. So its level of support out here, that's at a price point of about 37.14 out here. And that becomes its area of support. Likewise, the resistance is all the way up here at the 37.41 type level. That is on the NQ. Might as well go take a look at the Dow here. I won't put the Russell up on the screen only because it's a 10-minute delay, and I don't like giving you delayed information out here. The Dow here, not as clear with regard to where the bulls are hanging out. However, there's a little hammer candle that did form back here at 2 o'clock in the afternoon, and that looks like that was on May 30th. So that says that that's an important level to be watching. By level, I mean the low of 16 at 645 out there, because if you close below a hammer candle, if you are long, you are wrong. That's what the message is there. If we take a look at the VIX index here, signals inside the VIX still well below the 50-day exponential moving average. That happens to be priced at 1308. It's priced at 1221 right now, but it is continuing to just simply nudge its way higher out there. So that combined with the Euro-Japanese yen that looks like it wants to pull back, the NYSE that says, hey, bears have control of the marketplace. It just says that the retracement that you might want to be looking at to buy is underway. Folks, it is a wonderful Wednesday. Thanks so much, as always, for joining us here at TFNN. We truly do appreciate it. Have a great day. I look forward to seeing you as soon as I possibly can. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.